Hey, it's Tom with Symbol Surfing, and I have a video today about Adobe systems. And by the way, if you're getting mixed results in your trading or investing, I can provide you an independent perspective, and we can review your portfolio for free. So you can just click this button and schedule a free appointment with me, and we can go over the stocks or ETFs that you own. And I think you'll get a lot out of it. Right now, it's completely free. Normally, I charge $250. So take advantage of that. Schedule that now. I'm not sure how much longer I'll be offering that. So let's get back to the purpose of the video, which is Adobe systems. All right. Now, Adobe systems, we've all heard of Adobe systems. They have PDFs, they do Photoshop and Adobe Premiere, like on and on. So they're a $213 billion company, which makes them a large cap. And the market cap speaks to the financial size of the company. And I was doing a little bit of research on one of the other pages on Symbol Surfing, and Adobe is actually one of the top 50 largest companies in the world. They're in the NASDAQ 100, and they're also a member of the S&P 500. And as I mentioned, they're in the software industry. I did a video on Cloudera. They're a much smaller software company. So basically, Adobe is a large software company. So let's go down, look at the charts now. So on the 1 year chart, there's a few things I'd like to mention. And the first thing is, if you look here, I'm going to draw a couple of lines here, and I think these are really important. So I'm going to draw one horizontal line around here, the $500 price point, and another horizontal line around the $450 price point. And so basically, as you're looking at this chart, I just want to also notice that the 52-week high was recently set here. That's up here, right by the D in the symbol on the actual chart. So for the last 6 months or so, this stock has been in what they call a trading range. And this bottom line is called a support line. And this top line is called a resistance line. And I didn't draw them perfectly, but I hope you get the idea. So what's happened now that you see those two trend lines, you'll see that the price went, through and up through, and then hit this the alt 50-week high and all-time high, but then kind of came back down, went up again, came back down, went up again, came back down halfway, went up again. Went through, then came all the way down through the support, but then quickly went right back up and hit the resistance, only to come back down and go sideways for a little bit. Then rallied up again, and then came back down about halfway, then rallied up again and went sideways up along this $500 level, then went back down again, and then bounced up a little bit, then came back down, then sure enough went back up, headed again. Now it's broken through this support at 450, okay, and the chart doesn't really show it, but it's actually at $450 right now. As of the close today, I think it's at $450. And basically, the old expression, past performance isn't indicative of future results. Well, this is an example of how you can use the past performance to predict future results, basically. So if this thing is at 450 right now, it definitely, in my opinion, could easily shoot up to 500, which would be, if you had, one share of stock at $450, and then if it goes up to 500, you can sell at 500 and make a $50 profit. And that's happened basically, once, maybe twice, or, and then 3 times, maybe 4 times, and then 5 times over the last 6 months. And, people that are, spending time on a daily basis looking for setups like this, they're probably have been doing this. Maybe you don't catch every single one, but it's a very large established software company. So to do this type of trading, it actually happens. So I'm thinking that this stock could easily, and it could happen very quickly. Like on this one, this happened over a couple of days. And then the one thing I do want to do a little bit of a warning here. I'm going to remove these trend lines for a moment. Okay, so there is a risk, obviously, with trading and investing. The risk right here is the price is below both moving averages. Not just when it was in the trading range, it was just going up and down the 50-day moving average, but now it's a little bit different. The price is below both moving averages, and so that could have more of a bearish. That could be more of a bearish signal for the stock. However, if the stock just shoots right back up over the next few days or week or month, then that's going to change. But just looking at, all we know is what we see right now. That is a possible situation. And then one other thing, if you watched my Cloudera video, I just want to note that a lot of software companies, large, mid cap, and small cap, have had this same pattern where they were at a high and they just sold off quite a bit. And I think that has to do with, traders, investors taking their profits, and it could be some sort of a, sector or industry rotation with the money. One other thing I'd like to note is Adobe is scheduled to announce earnings on the 23rd. And, the earnings dates, and that's what these vertical white lines are on the chart. The earnings dates are the time of year where a company is basically disclosing their financial performance over the last 3 months. It's their financial report card, and that is going to be a key factor. So that's on March 23rd. So I would watch out for that. But I hope this video has been helpful. And if you wouldn't mind, please like this video or subscribe if you'd like to get more videos like this. And then if you have any questions, please leave in the comments. Thanks for watching.